Out of all the cities in the United States, none has received as much hype in the last 5 years as Austin, Texas. From June 2016 to June 2022, home prices in Austin have skyrocketed by 101%. This has made the city the center of talk about a housing bubble. After the sharp interest rate hikes in 2022, the housing market here took a nosedive. It's one of the few places in the country where I truly believe a real estate crash is looming. If you're familiar with my videos, you know I usually stay positive about the overall US housing market, but Austin is a rare exception. Here the crash may have already started, and we're now in the middle of a huge downturn that began back in 2022, and it might get even worse. To understand why, we need to start with a bit of history. If you were a buyer back in the summer of 2016, you would have expected to pay around $2,050 a month for a typical house in the Austin area with a standard 30-year mortgage. Just 6 years later, in the summer of 2022, that typical payment had shot up to nearly $4,900 a month, a 140% increase. Fueled by a massive influx of Californians and other West Coasters moving to this hyped-up Texas mega hub, Austin became the go-to destination for everyone, especially tech companies. Oracle, Tesla, Apple, Facebook, Microsoft, almost every big name greatly increased their presence here. With that came high-paying jobs and massive equity distributions, turning Austin into what is essentially the new Texas Silicon Valley. But after the summer of 2022, things began to change dramatically. Migration slowed down, interest rates jumped, and the overall vibe in the tech market dropped off. The number of postings for software developers and other IT positions on Indeed peaked that summer and then dropped over 70% in the next 2 years. It could be said that Austin grew way too fast in the perfect storm following the pandemic. What was once an affordable and cheap city compared to the well-known tech hubs quickly became the kind of place everyone was trying to escape to, but with worse weather. Austin essentially turned into the very same town they were all running from. Now, why do I think the housing crash has already started here? Well, just look at the data. According to Zillow, the typical single-family home here has lost 17% of its value since the 2022 peak. That's a significant drop, and the future doesn't look bright either. The decline is even bigger than what Austin experienced during the 2007 recession, when home values across the nation dropped at the worst rate since the Great Depression. In fact, during the last crises, Austin was pretty resilient, with prices only declining about 5%. That makes today's drop about 3 times worse, but it doesn't end there. While this massive price boom was happening, home builders in the area went on a building spree thinking they had struck gold, and for a while they did. As they built, home prices soared in ways they never could have imagined were possible. But they didn't know when to stop, and a mix of greed and blindness took over. If you look at the number of residential building permits pulled for the Austin area, you'll see an alarming trend over the last 7 years. Since about 2018, there has been an excess of homes being built, which was great while the town was riding the hype train up. Now that it's plateaued or arguably on a downtrend, this overbuilding is coming back to haunt Austin. Broken down by month, you can see how excessive it got during the recent boom, with a 989% increase compared to the low levels during the last major recession. Home builders have cooled off recently, but these are permits, meaning that these structures won't even go for sale for years after the permit is recorded. Right now, the level of homes being built remains high, which tells us that for the next year or two, there will be growing new inventory in an already declining market. And speaking of inventory, Austin has some of the worst stats in the nation. According to Realtor.com, the Austin metro area has already surpassed the number of active listings it saw in 2019. While their charts only go back to 2017, it's clear that the trend is sharply upward. During the low point in February 2021, there were about 1,300 homes actively for sale in the entire metro area, putting massive pressure on prices and buyers. Today, that number has skyrocketed to 10,913, representing a 740% increase. In real estate, inventory typically tells the tale, and with prices already on a massive downtrend, this correlation is flashing red. There are very serious concerns for the Austin housing market, and you can just browse Redfin or Zillow for yourself to get a glimpse of this. To make it even more apparent, we can look at the Revenger app for specific neighborhood information. In the 78746 zip code, there are clear signs that this part of the city is experiencing a decline even worse than the metro area stats suggest. This has always been a pricey area, but home values here took a massive plunge following one of the biggest rises in the US, with median values skyrocketing from $500,000 to $2 million in a matter of years. It's no surprise that we're seeing this part of the city normalize rapidly. Inventory has gone from just 39 homes to over 150, and there are real-life examples of buyer delusion where sellers still believe in the peak prices their neighbors once got despite the market reality on the ground. For example, this 4-bedroom, 2.5-bath home purchased in 1983 for $103,000 is now listed for $1,275,000. However, the owners are struggling to attract buyers. Initially listed at $1,550,000 in April, the price was slashed to $1,475,000 after 2 months without any interest. Despite this significant reduction, no buyers emerged, leading to another cut down to $1,275,000, a total discount of 18%. 2 weeks later, the house remains on the market. This scenario is common throughout the Austin area, highlighting the disconnect between market reality and seller expectations. Many homes might be worth 20 to 30% less than what sellers or Zillow believe, likely causing prices to drop even further. Examining the sale history of this random home reveals just how dramatic the real estate market has become in this part of Texas over the past few years. Originally sold in 1983 for $103,000, the home changed hands again in 1987 for $131,000 and in 1991 for $120,000. You might think that 1991 was a long time ago and money had more purchasing power back then, which is true. However, this doesn't fully account for the explosive growth seen over the past 30 years. Adjusted for 2024 dollars, the 1991 price of $120,000 would be approximately $280,000. This means the home's value has outpaced inflation by a factor of 4. Examining the graph, it's clear how dramatically home values have surged in the past 5 to 10 years. What started as steady, normal growth has turned into a parabolic rise, with prices escalating at an unprecedented rate. For instance, in 2022, this home's value increased by 27%, and in 2021, it rose by 20%. These are extraordinary annual returns for real estate, and given the current inventory levels, Austin could become one of the most volatile markets in the US. As sellers are discovering, values aren't what many believe, and there have already been significant declines that most haven't realized. While a crash like the 2007 housing crises in other cities may not occur, a strong market correction is already on the horizon and seems highly probable for neighborhoods throughout this city. This region has been increasingly relying on big tech, shifting away from the oil dependency it had in the 1980s. However, transferring reliance from one industry to another means that a city heavily dependent on a single sector is still vulnerable. Austin experienced this firsthand with oil in the late 1980s. While the rest of the nation only slightly budged during the early 1990s recession, Austin faced a significant housing correction. This was largely due to falling oil prices that devastated the local economy. The market peaked in April 1986, then fell for over 4 years, bottoming out in 1990 after a dramatic 27% decline. It began a slow recovery, not surpassing the 1986 price until the summer of 1994, nearly 8 years after the crash started. You can clearly see the effects of this trend by examining our example house. Purchased in 1987, shortly after the crash had begun for $131,000, it was sold 4 years later in 1991 for $120,000. While not as dramatic as the local chart suggests, it is evident that Texas was experiencing significant declines during that period. With so much money and so many jobs reliant on the big tech industry today, Austin is once again vulnerable to the same type of decline if something were to disrupt the booming tech sector. Austin's market is already struggling and undergoing a correction. If a tech crash were to occur, combined with the existing unbalanced inventory, Austin would be a prime candidate for significant home price declines, making it one of the most vulnerable cities in the US for such a downturn. As this peak becomes more apparent and the decline becomes steeper, questions surrounding Austin will continue to surface. Many believe that this is just the beginning and that Austin is already becoming the epicenter of the next housing crash. While there are some concerns, I tend to think that the next Austin crash will mirror the one we saw in the late 80s, with its dangers confined to this specific, incredibly unique market. Thank you guys for watching. As always, please make sure you hit that like and subscribe button if you enjoyed this video. I will be releasing a detailed written piece complete with more in-depth analysis and charts on my brand new Substack. If you have a chance, please subscribe. The link is in the description. Finally, I want to give a shout out to foreclosure.com. They are the premier resource for distressed homes for sale in the United States, offering a vast repository of over 1.8 million listings, including foreclosures, pre-foreclosures, bankruptcies, tax liens, and other distressed assets. If you're an investor, please take a moment to click the link below. You'll get 1 week for free if you use the link provided.